The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you, all you tigers and tigresses growling and prowling out here with us. We get the Dow right now up 37, Nasdaq's up 12, S&Ps are up 6. We get gold down 6, silver's up 4 pennies, platinum's down 7, bonds down at 0.5 ticks at 146.26, and King Dollar's hanging in there at 81.35.
It is. It
and
really is hanging there.
Boing, 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 boing. We got to bounce. The real question is going to be, how far can we bounce, folks? That's the real bottom line.
Yes, absolutely.
And, you know, if I, S&P-wise, what I'd actually love to see, you know, and what you had yesterday, too, folks, okay, the bottom line is that you get a B to C of an ABC structure down. We had come down with $1.1 billion. You went up yesterday with $700 million. If we take a look at the cash S&P, it'd be sweet if the thing could really, you know, get into this 1358. Might only make it, though, like to 1340. 1358 would be really sweet. Let's see, what day is today?
Today's Tuesday. Another P-index day. I know we're coming into Friday.
Okay.
You know, into a holiday weekend.
Right.
You know,
which would be perfect.
Getting into summer, so, you know, push it a little bit higher on,
I like
on
that.
light volume.
Yeah, no. Listen, push it right up until Memorial Day. We're off Monday. Push it until Tuesday. That works.
Yeah.
I can get my head wrapped around that in a heartbeat, man.
Yeah, no, absolutely. Well, we'll see what happens when it gets into that 1340 area.
Right.
You know, it will give us some kind of feel. You know, so still 16 points away.
Yeah, I know. And, of course, Facebook took the world to the cleaners.
Still are, huh? They still are, man. Down at its lows.
Now
almost,
it's
right?
It's at 31.97. Now, so check this out, folks, okay? What you're going to see here, this is going to drift down to 28. And 28 was actually the first price they were going to price it at.
Okay, yeah.
And, though, it was going to be 450 million less shares? Yeah, I mean, it was both. What they did is that they upped the amount of shares that were pushed out to the public. Okay, so they pushed it up at 128 million.
Okay.
428, 526. No, maybe 200 million. I think they're supposed to push out 4. Well, the bottom line is this. It's going to drift back to that number, and, you know, it's going to be a destroyed stock for a while. You know what was amazing? We were talking about the PE that was pushed out.
100 times or whatever.
But this is more bizarre. Listen to this, folks. So the PE, when they pushed it out, was 107 times. So $107 to buy $1. But let me tell you something. It's even more bizarre. When I was looking at it this morning, what they actually pushed this out at was 25 times sales.
Really? Yeah.
Oh, my God. Times gross number. Okay?
Yeah.
Times gross. Think about that, folks, okay?
Yeah, exactly.
Listen, how many companies do you want to buy? If you can sell something 25 times sales, let me tell you something, folks. Sell it all day long.
Right. That's right.
And don't go to sleep and open another company the next day.
That's right.
Oh, my God. Times sales. Oh. You can sell anything, folks. It depends on how much you're going to spend to sell it. That's
well, in this case here, they didn't spend a lot.
To sell it?
Yeah.
Yeah. No, that's right. No, that's right, because they had earnings, too. Yeah, no, I'm with you. Unbelievable. Unbelievable. Let's go overseas for a second. We take a look. Asia last night, folks, there's a small bounce in Asia. No big deal. Let's see what she did.
DAX up 91 points right now.
Yeah. So the Hang Seng was up 0.6. The Shanghai was up 1. So we go to Germany. We take a look at the DAX. Yeah, and so the DAX, also, by the way, folks, the DAX, the FTSE, Shanghai, all bounced on lighter volume. They're all doing a B to C of an ABC down. So yesterday, it's 126 million versus 191, 194.
So what I did this morning, and I shared it with the audience of the 9 to 10 o'clock show, as well as including my my newsletter this morning.
Yes.
You know, and last night I wanted to watch the Rangers game, Rangers New Jersey game. And so I was flipping through some of the channels, and as I was going through them, all of them had the headlines that it was the biggest day in 2012 in the markets.
Oh, really?
Yeah, that's what everybody was talking about.
Oh, my God.
So I did this morning for my clients, and I put up the chart of 2007 down to 2009.
Right.
And said, okay, it's not that, the headlines yesterday are not the signs of a bull market.
Right.
Instead, they're the signs of a bear market. Let me show you why.
Oh, man.
Because the top 10 out of the top 20 percentage and point gainers occurred during 2007. Well, they occurred during 2007 down to 2009.
Wow.
So having a headline in 2012, and it was the biggest day.
Imagine
not really a good sign.
Well, you know what? Actually, what's pretty cool is that someone called yesterday, and I didn't let the cat out of the bag. But what the call was about was...
Oh, yeah, I heard.
Did you hear it?
Just a little bit about it.
Okay, because Steve's going to have a special report coming out. And I've already seen the math, folks, and you got to see this thing when it comes out. No, is it coming out at the end of this week? When's it going to come out?
Yeah, I'm going to produce. I'm going to start producing a video as well as text to go with it this time.
Okay.
A little bit, just even a little bit different of a special report, only because I'm going back to 1928 in the stock market of the Dow. And so there'd be so many charts. I just actually want to walk people through,
what
Wait
do you see it, folks?
What to look for.
Because it's amazing.
It is.
It is absolutely amazing. There's no doubt about it.
That's right.
And the numbers are
I know.
crazy.
So I kept going back and checking out the math.
When you showed me, I was looking at it. Exactly.
Exactly.
So anyway, you'll get that next week, folks. And, you're going to want to read it and really wrap your head around it. Because if we can learn anything right now, folks, forget technical, forget fundamental. What you better get out of this, right, is that when they're pushing stock out, one big BS, folks, okay? Pushing, because the bottom line is that they just took everyone to the cleaner.
I like to call that before Steve.
Before Steve.
I like that BS.
I like
before
that.
Steve.
That's a fact. Excuse me, my BS, folks. But the bottom line is that it's absolutely disgusting what they got to pull off. The thing that blows my mind is that you can see how it happens, though, that people have such short memories. You get the bait in the water.
You do.
You get everyone riled up, right?
Yeah.
And then all of a sudden, what do? They spend all their money.
Yeah.
And they don't even analyze it. They're just, the thing that blows my mind is that we are risk takers.
For sure.
On a continual basis.
For sure.
Okay?
For sure.
But the difference, folks, and this is really, if you're going to be a risk taker, you have to absolutely understand probability. And what you absolutely have to do first, every single time before I do something, I always say, how much can I lose? And I make sure that I can lose it. And I say, okay, that's gone.
Yes, absolutely.
Because there's a different mindset if you do that, because what happens is that, number one, it's not going to change your life. And number two, once you really understand things, you're going to have more gains than losses. It just happens. But you're not going to if you don't have any money.
That's right. Well, that's where if you don't put on the right position size, no matter what it is you're trading,
exactly,
then risk becomes a whole different thing. That becomes an implosion.
Yeah, a destruction.
Yeah,
a destruction.
And it's not so much the destruction of the loss of the monetary destruction.
Right.
I mean, that's one thing.
Yeah.
What happens is it becomes a mental destruction.
Yeah.
And then you don't get back to doing what it is that you should be doing.
That's right.
In fact, really, the last 2 mornings I've been talking about the importance of discipline, because when I took a look at Friday's workshop, that I did, our worldwide workshop, it really, when I netted it out, it was really all about discipline.
It is.
It was absolutely 100% about here is a disciplined approach to trading.
Right.
You will not catch every move.
Right.
So let me just this
you
is
don't
not.
have to.
It's not. That's right. It's not a holy grail. You will not catch every move. But let me just show you the markets move and create A, B, C, D patterns on a continuous basis. Just be patient and wait. Wait for the right move.
Big time.
And so, it's really all about being able to have the discipline. And the question becomes, in this case here, where that we're going to have some type of bounce, and certainly we had a bounce yesterday. It's a little bit of a continuation here right now. Maybe it continues through Friday.
Right.
The question is, do you want to play this bounce, which you can.
Yeah.
The problem is there you have more potential risk to the downside, I think, than you do gain to the upside.
Oh, I agree. No, I wouldn't.
Too risky.
I wouldn't play the bounce.
Yeah. Exactly.
And the reason I wouldn't play the bounce, folks, is that when you have markets like this will come out of nowhere. I mean, meaning the next down leg. I'm hoping happens here, which is, see, this is where the context of really understanding, how just thought processes go too. I'm sure there's plenty of people say, well, why do you want it to bounce? I want it to bounce because I don't want to, we already cleaned up. We cleaned up beyond belief yesterday, okay? And the bottom line is that I want it to bounce as high as it can bounce because I know the confirmations are in now. The confirmations, we broke the swing point. We have highs with no volume. We broke the swing points with volume. We went to a low with volume. All the markets across the world are doing it. Folks, that's it.
Right.
Okay? So now what you want to see is the biggest, baddest bounce you can get. Well,
in a world where certainly the valuations are going to be, some of it is contingent upon the strength of the dollar or the weakness of the dollar.
Huge.
And, you take a look at there's not even a chance that anywhere over in Europe they're even close to resolving the issues that they've got over there. And Greece being really the small problem, yet potentially, you think they're solved.
Oh,
I'm sorry. I missed the memo. I didn't get the memo. See,
hey,
folks, I left a little early yesterday.
I can't believe that Steve didn't get the memo. This morning, folks, okay? The Prime Minister of Spain, all the banks in Spain, they came out this morning and said, hey, Steve Rhodes, don't worry about anything. We're going to do a test of all our banks and show just exactly how strong they are.
They're going to do a test.
No. Listen. Hey, folks, I'm not kidding. This is the headlines today in the Wall Street Journal. I swear to God.
I love it.
I swear to God. Steve Rhodes. They had everything but Steve's name on the front page. Folks, now what you want to do, and this is really cool, you want to take that type of information and just realize that look at the garbage that they're feeding.
Yeah.
It's unbelievable.
Absolutely.
It's unbelievable.
Yeah.
Let's go to Victor in New Jersey. Hey, Victor, what's going on?
Yeah, how you do? You know the boy Jackie Diamond's on Capitol Hill today. They're going to drill him, and I guess that's why the bank stocks are going up today to make the fall lesser. You know what I mean?
Yeah.
That's the problem today. They have all their puppets. And the guy that heads the thing, I heard, used to work for Goldman Sachs.
I think it's those Catholics.
Yeah, I told you about the Illuminati,
I know.
Remember?
I know, man. Those Catholics, they're manipulating that marketplace.
You think they're just slowly going into it so you know it's a Ponzi scheme and the banks have no money? What do you think the whole purpose of today is? Like J.P. Morgan's up 2 points today.
Yeah, that's a dead cat bounce.
You think so? You think the whole system's going to collapse by the summer?
No, the system's not going to collapse. We already went to hell and back.
Yeah, but we're retouching the 2009 levels, right? All the stocks.
Yeah, but that doesn't matter.
Yeah, we're going to come out cleaner and ahead. Europe's behind us, no?
No, but you're saying a collapse. I'm saying that the collapse is already done. Listen, everyone already went broke.
I don't think it even started. The derivatives are more than you can fathom, they said.
Well, listen.
The derivative market is going to bring everything down again.
I doubt it.
Yeah.
It doesn't mean that it won't bring companies down, but the worst is over, man.
You said with the mortgages and all that, they bundled them over there in Europe too. They saw them work their way through that too.
Listen, man, I'm telling you, I gotta send you another set of Catholics. I'm gonna send you the bad Catholics. You must have done the good Catholics. I'm only kidding, Victor. Listen, man, have a great one. Have a safe one. Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investment Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now,
Yeah.
Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Master Show. Tom had to do a quick live update for one of our radio stations, so he'll be gone for this break. But, his chair's still here, his computer's still here, he's all here, so he'll be back after that radio update. And right now you got the Dow trading up 43 points, S&P's up 9, Composite up 15, small caps up 5. So leading the charge on the way up, you've got the S&P's up 0.7%. Dollar-wise, leading stocks out there, you got Priceline up $13. Chipotle got it right 2 times in a row. How about that? They're up 2.6%, up $10. LinkedIn up $8. Apple right behind them up 5. You've got Ralph Lauren up $5. MasterCard up 5. DSW Inc. Shoes, they're up $5. Nordson Corp. NDSN, they're up a nice 10% this morning. On the way down, leading on the way down, you got Express Inc., the retailer out there. They're off 25% this morning, down $5.84. Last firing off at $17 and change. Google down $3. Hugoton Realty, HGT, they're down 18%. What the heck is going on with them? We'll take a look at that. You've got Cree, CREE, they're off 6% this morning. Cyberonics are down 4%. Seagate Technologies, STX, off 6%. Western Digital, so the hard drive companies not doing well this morning. Western Digital down 4%. And you got Facebook. Facebook down another 4.5%, trading out right now at 32.52. So let's go take a look at the financials here first. We take a look at the financials. Start off at the XLF, just picking up off of Victor's call from Paramus, New Jersey. And Tom, being the biggest Irish Catholic out there, was certainly just having fun with Victor And if we take a look at the XLF, it's trying to get into the get up and over the October 27th swing point out there. That October 27th area has 232 million shares. The high 14.17. You're trading at 14.15 right now. The XLF. If you're taking a look at Tiger TV, watching us on Tiger TV, you take a look at an A to B equals CD down pattern. And that A to B equals CD down pattern, you've got price moving well along the inside channel line there. That says that the price move off of that C to D leg much stronger than it was off of the A to B leg. And that says that the financials have got further to go to the downside. So doing nothing more than setting up another A to B equals CD pattern. And if it does, meaning the XLF does close above 14.17 today, where it will be headed to then is that March 6th swing point. I expect that will really be the resistance area here in the March 6th swing point. The high is 14.62, the low out there being 14.40. If we take a look at, we've got someone in the den who wants us to take a look at, our man MMS wants us to take a look at the euro on the short-term basis. And, folks, if you have not tried the Tiger's Den, do yourself a favor. Absolutely fantastic, incredible, unbelievable group of peers. When you want to be able to pick your game up to the next level, you just simply have to make sure you're hanging around the right circles. Well, that is the right circle to be hanging out with. You can go to the homepage at tfnn.com. You can test drive the Tiger's Den for 30 days absolutely free. Let's go take a look at the euro. Since I said 30, let's look at it on a 30-minute chart here. And so on a 30-minute chart, I don't show this too often. Hopefully you are following us on Tiger TV, and you can see this tool here that's on my chart system. Now, it's a incredible tool. You know why it's an incredible tool, folks? Because it's called Pesavento Patterns. And Larry Pesavento, certainly not the godfather, but certainly one of the godfathers in being able to communicate to us about Fibonacci and all the expansion and contraction patterns that are out there. You certainly want to be familiar with expansion and contractions in between swing points. And those numbers that you want to be able to have in your arsenal, you want to be able to have retracement-wise 0.618, 0.786, and 0.312. And on the expansion side, you want 1.618, 1.272, and 2.618. If you could just simply memorize and be aware of all of those numbers, folks, it would absolutely help you. So on the euro, what you can see, the euro did this morning, what it did coming into the 9 a.m. time frame, you had a 0.618 retracement that it was doing. Normally you do a 0.618 retracement, and then you start to move a little bit higher. It was also making a move only going back just simply to the 6:30 a.m. time frame. What is beautiful out here that I want to be able to show you is being able to identify different changes and directions. Now, if you were actually trading the currency pairs, you would absolutely want to make as a must having this tool on your system. Why? Because it does all the work for you. You can be doing something else. But take a look at this. Off of a swing point here, you've got a 1.618 expansion, a 2.618 expansion, and a 0.618 retracement. And what does the euro do? Makes an immediate change in trend, only for an hour or two, but that would have helped you if you were short the euro. 877-927-6648. We come back. Tom will be back with us. You got the Dow up 48 points. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of tfnn.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 55, Nasdaq's up 15, S&Ps are up 8.5, and
got a couple of guys getting smoked this morning. Express. I don't know if Angie, she probably didn't shop there. I think my daughter's probably shopped there. Down 27%.
What's that symbol?
EXPR.
EXPR.
So you got kind of the tale of two worlds. You got the Express is trading down 27%. You got Ralph Lauren was trading up, only 3 or 4% right now. But take a look at.
Whoa,
take
baby.
a look. Yeah, I know it's a dangerous. Dangerous. Then you put the thing on a monthly, and you're like, oh my goodness.
But, okay, so watch this, folks. This is amazing, though. It really is. Same deal. All the volumes down the low.
Yeah.
Look at this.
Yeah.
I get Express up right now, folks. I just put this on a monthly. This is going to stick out like a sore thumb. This is sick. Look at it.
Yeah.
Okay. Yeah. Oh, my God. In one day, it's there. Okay,
exactly.
$16. Check this out, folks. $16.12. High volume low. High volume lows get tested. Well, you know what? It gets tested in one day. Jesus. From 24 to 16. Yeah. Oh, my God.
Yeah.
But that's it. And now the volume's even going to be higher.
Exactly. Yeah.
That's.
And then you got, let's see, we had, this morning I thought the auto guys, AutoZone, AZO, maybe they are not taking as big of a hit this morning. No, they've come back. So they're buying into that.
Yeah, but that's
I know.
Yeah. I'm with you. So you got AutoZone, folks, at 371. It had gapped down to 357, made it all the way back up. But what you're going to have here, which is pretty cool,
You're going to have a swing point now with lighter volume too.
Well,
you know, if this is
on the weekly, you'll be heavier volume.
Well, that's
right?
true. On the weekly, that's right. Yep,
right,
that's true.
right.
On the weekly, yeah, absolutely.
You know, because this does want to take more of a hit.
Yeah.
And of course, you got Apple had a monster bounce yesterday, and that's not holding price today.
It's coming right into that breakout. It's coming right into that. You know, you can use that
ice.
one. You can go even
That's
over.
ice.
You can come further over. Yeah. You know.
ICE is 374. Hit 370, 388.
Yeah. And the top of that gap up a little bit further over to your left, that higher volume gap up right there.
Cool.
That's really, you know,
yeah.
That's where it's headed to. Turbulence. I put on the turbulence sign this morning as everybody's pilot. Fasten your seatbelts.
Yeah, it is turbulence.
You get a little bumpy on the ride.
There's no doubt about it. So let's take a look at some of the high volume stocks, even though we know we got light volume on the way up. You get Bank of America, that's up 25 cents. Facebook's down $1.55. You get J.P. Morgan up $1.67. Wells Fargo's up 74. And just as Victor says, they got all the banks up, so they're gonna they buy their own stock. You gotta love it. Seriously, they come in to buy their own stock as they get in front of the Congress. You gotta love it. Well, the amazing part, but anyway, folks, this is the amazing part to me in this whole conversation. You keep hearing, is it a hedge or is it, a trade? It's absolutely a trade, folks.
Yeah.
And so let's picture something for a second, too. This is what, so picture something. Picture that everyone has a portfolio out here. So what they're saying is this, is that they're saying if you're going to hedge something, well, then you're going to bet the other side of the portfolio.
Right, right.
Now, if you bet the other side of the portfolio, folks, okay, a true hedge just means that you are delta neutral.
Exactly.
Okay?
Still got to manage it every day, but yeah.
Right. Well, you would and you wouldn't, depending what the hedge is. If it's a true hedge.
That's right. Okay. If it's a true hedge, sure.
Right. The bottom line is that they're absolutely lying. This was a trade. This is now trade, and they've been trading forever.
And it's a trade they can't get out of.
Right.
It's not just a trade.
Right.
It's a trade they can't get out of.
Because they're
hoping to get out of it by the end of the year.
They're the biggest kahunas in it.
Yeah.
That's right. And
that's quite a trade.
Let me tell you something. They're not going to get out of it.
Which is really kind of crazy, because if somebody will call us, we'll take a look at a stock, maybe something that we haven't taken a look at, and usually one of the first things is take a look at the volume bars.
That's
just kind of naturally looking for high volume spikes, what have you. But then oftentimes you start taking a look at the volume bars and seeing, a fairly illiquid stock.
Right.
And we'll just kind of say to folks, you can't get out of this.
Right.
That easily.
That's right.
So don't get into it. Now you got J.P. Morgan in something that they can't get out of.
That's right.
I mean, just your basic first fundamental.
So where do you think they're going to get out of it? Where do you think they're going to get out of it? They're going to get out of it.
Yeah. Oh, yeah. They're going to push it off. As you said yesterday, you're just going to simply repackage it, rebundle it, and push it off to the. They're going to Facebook it.
Right.
That's what we're going to start calling it. They're Facebooking it.
Ooh. Oh boy, that's a good one. That's a good one.
That's what they're doing.
Get that quote. Oh baby. Let's go to Kevin in Tampa. Hey Kevin, what's going on?
Not much. I was going to buy some bank stock, and then I see the banks jumped up today, and so I'm a little confused.
Why are you confused? You're going to buy them, and they jumped up.
Well, I didn't buy it yet. Everything was so low, and now all of a sudden I just wanted to know if there's a specific reason. I guess she was just talking about it, but I don't really follow it. Like, why would they jump? What changed?
I don't know. You tell me. You were going to buy them. if you were going to buy them, you're going to tell me what changed.
I don't know. I don't know that much about the stock market. I was just going to buy like a few hundred shares of a couple of bank stocks, and they were so low.
Okay.
Why did they go up? I guess is the question.
Because they knew you were going to buy them, so they wanted to get in before you, so you couldn't buy them.
That's a good reason.
Actually, when you do have conviction behind something that you want to buy. What you actually do want is you really, Kevin, in my opinion, you really do want a second opinion, and that second opinion says that price is moving in the direction that you want it to move. So if you really had wanted to buy something, and so that you can maybe use this in the future, I'm not suggesting, by the way, that you buy the financials, but if you use as a discipline that you've decided that on Tuesday, so you decided on Monday night you wanted to buy something. What I'll tell you to wait, if it's a long term, it means you're basically on a daily chart, wait till the following day and see if the price moved up. At least if the price is moving up in the direction that you're looking for, that's actually what you want to see. Does that make sense?
Do you see the bank? I was going to buy I don't have a lot of money, like 300 shares of Citibank. I mean, nothing, but do you see it moving up or which way?
Well, we're coming from the position that the market is in the early stages of a markdown period. Just like a retail store where you've been through the season, and you've come through the Christmas holiday season, and you start to mark down all the goods that are out there right now. What's really going on in the marketplace is you've got a bunch of leaders that are being marked down. And so until that markdown phase is over with, you don't really want to be buying any individual stocks.
Individual stocks.
That's my take. You don't want to buy during the markdown phase. You want to be looking to sell during the markdown phase. And if you haven't gotten out of something and that first stage of markdown has occurred, you want to be taking a look at that as a selling opportunity. You want to let the market bounce up so that you can take your cash and sit on the sidelines.
All right, I think I'll keep buying antique cars then. All right, thank you very much.
I like that.
Have a great one, man. Have a safe one.
How's that for good?
He calls it a dozen different names, and this is the same guy that called with 10,000 shares of Citigroup, and and I don't mind that, folks. Okay, but be real. Okay, so it's anyway.
Yeah.
You get Honeywell is up 42 cents. You get IBM up 20 cents. Merck's up 7. You get J.P. Morgan up $1.95. That's those Catholics again. They're all over that J.P. Morgan. ExxonMobil's up 70 cents. You get Oxy up 146. Now let's go over to the energies. XLE.
Yeah, that's right.
Okay.
You talk about just being smoked and really continuing.
Yeah, and look, so this is going to be fun.
It's not over.
No,
it's not over inside the energies.
What's going to be fun here is this. So what happens with energies, folks, is this, which is really cool. They love large consolidation. So once you're onto them, you can trade them for 2 or 3 years at a time, meaning up and down. So look at this consolidation.
No,
this one here is from 63 to 76.
Yeah,
which is just dynamite, man.
Yeah,
you know what I mean?
And actually, I still think they've got further to go. Now, what did stop it is if you go all the way back to, on the daily chart, all the way back to August 5th in 2011, where there was a big volume downdraft.
Right.
The low of that was 64.47. Right. And that's actually what has stopped it. And it stopped it in its place in November.
Right.
Stopped it, when I say stopped it in its place, folks, when the XLE was moving down, it stopped it in December, and it has stopped it again here in May.
Right.
So when you take a look at the ABC down on this thing,
right.
And it's only made a 1-to-1 so far. It's telling me it wants to actually get down into October.
Oh, I agree. No, big time. No, it's going to be a huge ABC down. No doubt, doubt, man. I mean, you see what you have is that and that's that your initial downdraft in 2011, folks, went from 77 to 64 with 205 million. That's the only thing that's saving it right now.
That's right.
This will build
Those
more
fish
cars.
are still in there.
It'll blow that baby away. It'll get down to that 54 level, and more than likely, it's going to get down to 49.
Yeah, I was looking at that last night.
Yeah,
I was like, my goodness.
I know.
I wanted to see what the weak sector out there. It's interesting. They actually, I think, used to be the second or third weighting inside the S&P. They've gotten hit so bad they've fallen to number 5.
Oh, interesting.
That
is.
Yeah.
What is Facebook number 1?
Yeah, Facebook.
Okay, so look at this thing here. This is getting smoked. You get a Realty Trust.
Yeah.
And this is let's see. So this is natural gas properties. Well, of course, it's down. Because there's no they're probably not paying the dividend because they don't have any more money. Let's see what they have to say. So this thing got whacked yesterday. It's getting whacked today. How to buy 60 cents. Well, don't touch it.
Natural gas has had a nice little bounce here. Still a nice little bounce. Still no pattern yet that it wants to move back down just yet.
Yeah. Well, this equity here, this dividend equity, folks, you better get out of town quick, because it's accelerating into the swing low of 720.
Sure is. With
volume. We're at $9 right now. This is off a high of 41. So big numbers. Let's go to Carlos in Garden Grove, California. Hey, Carlos, what's going on?
Good morning, guys. How are you?
Doing great, man. You having a good day out there?
Oh, very well. Thank you.
Cool.
I'm calling regarding Apple short again, but I want to know how high the rebound can go before I start placing again shorts. Because I closed my shorts last week around Friday.
Okay.
and I don't have any positions right now.
I think it's
going to be waiting.
I think it's close right here. I mean, it'd be sweet if you ever could get up to 610. That'd be beautiful. But what it did right here, what I would do is this: I would wait probably 3 or 4 days. And the reason I'm saying waiting 3 or 4 days, like I'm waiting to go reshot the market myself, and you'll get a lot more information in the next few days. And most of the time, you're just not going to have a bounce just for one day. I mean, the S&Ps look to me like they can bounce up to 136, Carlos, the SPY, or 133. So if that's the case, Apple will somehow, it'll probably gap open the next couple days, get higher. I don't think it's going to move much today. It's there. So, and I would predicate the shot on Apple with the S&P.
Okay.
Even though that correlation is not direct. But if the S&P goes up, Apple gapped up this morning, will gap up again tomorrow morning with lighter volume, and if it gaps to the second spot up there at 610, man, then just fire away, man, beyond belief.
Perfect. And one quick favor, if you have a time, and not when I'm on the phone, can you talk about the noise of Eurobonds that they're trying to say that maybe Europe will come up with it? Sure.
Yeah, no one's going to buy any Euro bonds.
Okay, that's what I want to hear.
Yeah, they're not. The proof of that, folks, is just the 2 failed auctions in Germany in the first quarter. Germany is a powerhouse, folks. That's the bottom line. And the bottom line is that they couldn't sell bonds twice. They failed. And if we ever failed with one bond auction, let me tell you something. It'd be a depression like overnight.
Wow.
Yeah. It's not going to happen. Don't worry about that happening. It's not going to happen.
Yeah.
But it would be that serious.
Now, the last thing, I want to thank you guys. I sold some gold to you, and I got a very good price for it.
Oh, good.
Thank you, Carlos. We appreciate that.
Thank you so much.
Okay, man. Have a great one. Have a safe one.
Thank you. Have a nice one. Bye.
Okay.
Yeah.
We got great tigers, don't we?
It's nothing like it.
Tigresses, too.
Tigers and tigresses, growling and prowling, no doubt about it.
Absolutely.
It's going to get interesting here. So we've got, if we go over to the gold market for a second, so GCM2. So wide price spread today, rejecting this. So we hit a low, folks, of 1572. It's rejecting that, doing it with 90,000 contracts, which is pretty nice, actually. So it's going to try to... Yeah, it's going to try to get inside that 1613. This is going to be interesting to see how this shakes out. The equities themselves, so the XAU is moving too. Yeah, they're moving. This is going to get interesting. Real key is going to be, okay, what is the catalyst here?
Yeah.
Is the catalyst that they've got smoked extraordinaire, GOLD. Man, it's a tough one figuring this one out right now.
Well, so if you take a look at, let's see, so got the dollar index.
Yes.
All right, so we know gold is measured in dollars.
Yes.
All right, so we know there's a direct correlation.
Right.
The fear aspect of it seems like that would have already played out right now, right?
Right.
So we can kind of put that off in the corner, right? For the moment.
Right.
We'll get back, we'll talk about it.
Steve Rhodes, Tom O'Brien, all you tigers and tigresses, we appreciate you growling and prowling out there, folks. Don't forget, you can get us 24 hours a day, 7 days a week at tfnn.mobi. tfnn.mobi on any device, folks. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 49, Nasdaq's up 13, S&P's are up 8.5. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom and Steve, how you guys doing?
Excellent.
Great. You having a good day out there?
Hey, it's a little rainy here, Tom, past few days, but they're saying Friday through Monday it's going to be sunny, 80 degrees.
Hey.
What more can you ask for?
There you go, man.
Good way to kick off the
Memorial
holiday.
Day weekend.
Hey, hockey game last night. You had the coaches jarring at each other. That's going to be great. New York, New Jersey.
They were going after each other, weren't they?
I love in playoff hockey.
Oh, yeah. That was a good game.
Let me set up my scenario, see if you guys buy into this. I'm looking at between now and Friday, come tomorrow noontime, most of Wall Street's going to be heading to the Hamptons. We're going to be on light volume.
What day is tomorrow?
Tomorrow's Wednesday.
Okay.
Wednesday, well,
Thursday.
Towards the end of the week, they're going to float this market up. And then, Uncle Ben, they want people going into a long holiday weekend to spend money, so they want the market to go as high as possible. So I'm thinking maybe up to like 1360, 1370. And then next week, they'll bring it down. Now, I'm in XIV. I know we're on hold to re-short, but I got a little antsy. I was playing the volatility, Tom and Steve. I'm in XIV at $9, and I'm thinking I can go to 11. If you can take a look on the daily chart and see what you think on that. It's XIV.
Yeah, certainly take a look at that gap is where you're headed for.
Yep.
Yeah.
Yeah, 1091. You can. I mean, that'd be a normal counter trend bounce, right?
What you want it to do is you want to get it, especially today. You want to see it close inside 994, 993.
990.
So yeah, just where you're looking at that high volume swing point out on April 10th. So if you close inside there, then it says, it can travel up to that $11.
Yeah, and this B to a C on the larger coming down, that C leg, if my understanding is correct, that's going to be the most violent leg down. Don't you guys agree? The next leg down?
C to D?
We're on the B to C right now, the C to D, I'm sorry.
Yeah.
You guys think that'll be the most violent?
We'll see.
It just depends on where the C ends, okay? Because, the C could go high. And if that's the case, well, then they're two straight line moves.
Gotcha.
Now the fast price destruction, I expect that you're going to get it because, we've got two of them thus far, and there's no doubt the second one was twice as much as the first one. So if this one only bounces to that 1140, 1150 S&P, then get out of the way because it's 100 points off of that level.
Right. So basically, we want to get a good bounce here because that would probably even add more to the downswing.
Actually, the lighter bounce, so take a look at it like this. 1340 is a number that we're taking a look at as the first target area. That happens to be the March 6th swing point low. That also, if you just take a look at this leg down, so from the highs in the S&P going back to May 1st to the lows that were put in on Friday, 1341 is a 0.382 retracement. If that's all that it does,
wow.
Got it.
It tells you
weak, yeah.
It tells you C to D is going to be it's going to be longer. Yeah. It's going to be a larger move than that A to B move.
It's going to be a long, hot summer, baby.
Keep the shots on, Tom.
That's right.
Thanks, guys.
Well, you should have the shots off right now, folks. But we'll be putting them on any day here.
Yeah, thank you.
Yeah, you bet.
Bye.
Yeah.
Yeah, that's the thing. Now, what will be the confirmation, what's great is when I was doing the live workshops,
right.
I used as a tool, I had people pull out rubber bands.
Okay.
What I had them do was just wrap the rubber band around their finger, about as tight as they could, and then back it off 38%, which was kind of like one. Okay, then let it go.
Yeah,
and you can see the energy. Then I had them wrap it up, and we backed it off 61%. And let it go. So which one has the more energy?
Wow.
382. I said that's exactly how the market works.
That's huge.
That's why you want to understand those retracements.
You stay right there, folks. Going out to beautiful Santa Fe. Kate Stault is going to be growling a prowl with you. Then Chicago, Victor Jones. Out to California, Ken Shreve, and back here this afternoon. Have a great one, folks. Have a safe one.
Take care, folks.
That's a great.